We'll start with Tesla, which was one of Austin's stars, up 62% last year, seventh positive year in 8. What do you think?
Yeah, I agree with Sully. Federal chicken Philly, best food there is. Unfortunately, they're last place. So Austin, Tesla, obviously, people like Tesla as a stock, though. But I think at this point, it's really a question of whether that stock is grossly overvalued based upon the fact that you view it as a car company, or whether you think it's just actually an AI transportation company. Now, if you view it that way, and Musk has this forecast of doing 2 to 4 million robotaxis, it's a completely different ballgame, and I think that the stock goes higher. At this point, it's really hard to chase it in the 400s, but if you want to buy it, you could sell 350 puts in March for $20, so you have an enormous amount of premium and get a very good toehold on the stock at that level.
All right.
Next name, we're going to go right by Austin to our second place performer, Miami. Royal Caribbean, one of the top names, second straight year of gains. RCL, big year. What do you see ahead, Boris?
So this is a true tension between the growth of the business, which it's expected right now is doing 30 million cruise tourists across the world. It's expected to go to 40 million by 2027. And of course, Royal Caribbean prime beneficiary of that. But it's also got 5-to-1 debt-to-equity ratio. It's got a massive debt service at this point, and cash flow only for about 9 months on hand. So in many ways, the bet on Royal Caribbean is actually a bet on lower rates. It's going to help it as much as a good growth business going forward. So if the 10-year goes down and employment stays relatively steady, Royal Caribbean continues to be a great buy. But it's just, you got to be very careful at this point because they are very, very leveraged to the upside.
All right, let's pick a name from Philly then. Let's do the worst performer, shall we? It was Five Below. The discount chain, the shares dropped 50% last year, which is its worst year back to its 2012 IPO. Surprising. I mean, maybe ahead of the tear. I don't know. The stocks went down a lot of the year. Boris, what do you do?
Yeah, just like Rocky, you got to believe in a comeback story. I mean, Five Below is hated. It's down 50% from last year. Everybody is really, really wary of it. Yet in the last quarter, they had a 15% increase in revenues and new management coming on board. If they can stabilize and just have incremental growth, there's a potential here for it to go to 125 from 100 currently. So I really like it as a speculative long buy. It's a great company. They just simply need to, reorient themselves. I think they have a chance here to come back, just like Rocky.